Senate Bill 1184 is a bill that affects agents and brokers who may be involved in some way with consumers who are obtaining veterans benefits. And it basically says that no agent or agent employee may be paid or charge anything to help someone get veterans benefits unless there is a safeguard in place to ensure that the agent is getting no financial incentive for doing that. So an agent can do it, but they can't basically they can't enter into an agreement to get paid for doing it out of the benefits or otherwise. So that's 1184. Senate Bill 1212 is a bill that would have expanded the ability of insurance companies to send certain notices by email or otherwise electronically. You may know that California many years ago passed something called the Written Electronic Transactions Act. And the general rule in California, and this is not just in insurance, but across the sort of economic spectrum, is that as long as the consumer consents to receive notices of whatever nature electronically, that the general rule is the business can then send them electronically. But there are certain exceptions. And in the insurance world, all of the laws that require notice of cancellation, non-renewal, rescission of policies, policy endorsements, all of those types of things still have to go out in paper through the U.S. mail or some other means. This bill, Senate Bill 1212, would have increased the ability to use electronic notifications, but it died. Okay. Let's talk about Senate Bill 1450. This is on page 15. And this is the last bill we'll talk about in this section. This bill, for at least another 5 years, eliminates the requirement that limits the percent of coverage that a mortgage insurer can provide. Current law basically says that if you were one of these mortgage insurers, that you can reinsure any amount in excess of 30%. But no less than that, 30% of the mortgage. And the idea was that you didn't want any one company to get too big. You wanted to kind of promote spread of risk. And that isn't really kind of the way it's happened. And so this bill takes that cap out for at least another 6 years. Theoretically, it should make mortgage insurance more available and it may increase competition. But we'll see. So those are the bills in that section.